Good morning, everyone. Welcome to another R of Crypto video. On today's video, we're going to be speaking about Bitcoin turning 13 and losing its market dominance as it becomes older. Also, how a Goldman Sachs executive said that Bitcoin can reach $100,000 only if there's a boost in its narrative that it's a store of value. Also, a little bit about China's central bank digital currency, which is the digital yuan, and also how institutional investors poured $9.3 billion into crypto funds in 2021, news about the NFT and the metaverse, and then we'll finish it off with Solana's network incident, which caused the network to go down. So at the moment, the market hasn't moved much. It's been quite a boring day in crypto. It's up by 0.5% or so. Bitcoin is down by 0.38%. Ethereum up by 1%. Solana up by 0.5%. The market hasn't really moved much aside from these few tokens which have been rallying for other purposes, and this is why they're moving against the market. As Bitcoin turns 13, we must consider why 2022 may not be its year yet. So Bitcoin turned 13 on the 3rd of January. Compared to before, Bitcoin doesn't exert the same dominance in the crypto market it used to before, when dominance used to be 60, 70, or even 80% of the market. Now it's standing at about 40%. And after dipping under 40% in the last week, the Bitcoin Dominance Index was calculated at 39.5%, which is quite low for Bitcoin. For something to be named king of crypto and its dominance being so low, it is concerning, but also it's exciting at the same time because it's giving way for decentralization in the whole market itself, whereby other smaller coins can have a chance to eat up some of that Bitcoin market share. So Jason Choi, the general partner at the Spartan Group, sees the year ahead as a time when Bitcoin will stop being the barometer of the crypto market. An asset that once enjoyed almost half the cumulative market cap of the crypto ecosystem has lost significant margin since it's touched an all-time high of close to 69,000 in November 2021. And in November 2021, Bitcoin hit all-time highs of almost 69,000, and dominance was very, very high because funds were just flowing into crypto. But ever since then, dominance has just been going down slowly and slowly and slowly. Looking at this chart, we can see that the dominance had gone up to almost 48% in October, and it's 49% in July. So the Bitcoin dominance has been going down slightly since it touched the all-time highs in November. A lot of money is flowing out of Bitcoin and into more altcoins, and that's why we see the Bitcoin dominance now standing below 40%. With this, we might see the end of Bitcoin is king and the market moves with Bitcoin. We'll see each coin moving in its own direction due to its own factors, and we're seeing this currently. If you look here, Bitcoin is going down when a lot of the coins in the market are going up. The markets are moving in an opposite direction to Bitcoin. It just shows that the narrative that everything in the market will move with Bitcoin is ending slowly. The reign of the Bitcoin empire is ending. Bitcoin still remains king, but it doesn't have that much push in the market as it had before. Also, the boring market over the last month, whereby there wasn't much movement in the market between Bitcoin moved between 46 and 50,000 throughout the whole month. So this boring market seems to have attracted traders back to leverage. This is quite dangerous in a sense because this, at the time when there's extreme fear, there are these traders which are bringing back leverage into the market, and they open extreme positions when they predict the price of Bitcoin or the market in general to move in one direction. And if the leverage is very, very high and the market moves in the opposite direction to which it was predicted by these leverage traders, then all of these leverage traders will be liquidated and the price of Bitcoin and the cryptocurrency market can suffer because of it. So the higher the leverage, the higher the potential for the markets to crash, or on the other hand, the higher the potential for the markets to go up. And it's two extremes. With leverage, everything is amplified. So an executive from Goldman Sachs said that Bitcoin can reach $100,000 in a hypothetical store of value boost. He stated that Bitcoin can snag market share from gold over time as a byproduct of more adoption, along with the potential from Bitcoin-specific scaling solutions. He said that if the prices were to rise 50% over the next 5 years, its price would increase to just over 100,000, and this would yield a compound annual return of 17 to 18%, which is amazing compared to banks, which gives you next to nothing, and you're beating inflation, and you're making some money. This is why individuals and companies are turning to Bitcoin and cryptocurrency as a store of value, as an investment, as a way to grow their wealth because it offers returns that no other asset class does. Also, Bitcoin's float adjusted market cap rate is just under 700 billion, adding that this implies Bitcoin currently commands an approximate 20% share of the store of value market. Bitcoin already has 20% share of the store of value market, and it's been around for 13 years. If there's more adoption going on, we'll only see this number rising to maybe 30, 40, 50%. And so China launches digital yuan CBDC app. And what does this mean for crypto? They've officially released a service platform for individuals to carry out pilot trials of the country's digital yuan on iOS and Android. So this digital yuan is a central bank digital currency, which is essentially a virtual form of fiat currency. They aim to keep an electronic record through a digital token of the country's official currency. And a CBDC is released by a country through its own monetary authority, which is usually a central bank, and does nothing to fix the overarching problem with all of fiat, which is centralization, because CBDCs are controlled by the central bank, means they're centralized. China has been fast-tracking the release of digital yuan, especially because they wanted to have it ready by the 2022 Beijing Olympics, and this was an attempt to try and get their centralized digital yuan into the hands of international spenders, and this is obviously a way to try and broaden the international use of yuan. They want to become a global currency, and this is maybe one of the ways to do it. Also, China's motives are crystal clear. With the release of their CBDC is to keep the power centralized. There has been a lot of FUD surrounding crypto in China over the past few years, but 2021 was when the country really cracked down on crypto. They banned all mining activities in June and banned all cryptocurrencies in September. It seems like it's quite perfect timing that they'll get rid of everything that gives financial power to the people, that snatches away even the slight control that the government has on its people, and by releasing their own CBDC, they can keep it centralized in the government's power. In 2021, we have seen a record $9.3 billion being poured into crypto funds by institutional investors. There have been 37 investment products that were launched in 2021 versus 24 in 2020. And there are a total of 132 products at present. And what this means, investment products, is your ETFs, your token-backed securities, and it just shows that the demand for these products are also increasing. Not only is the demand for cryptos increasing year on year, but the demands for products that are related to crypto. So funds like exchange-traded funds are also on the rise. And in terms of crypto fund providers, the world's biggest digital asset manager, Grayscale, remains steady with the total assets under management of 43.23 billion, followed by CoinShares at 4.75 billion, and 3iQ with assets under management of 2.52 billion. So as you can see, there is a lot of money flowing into crypto. A lot more people are now placing higher risk investments, which are crypto, into their portfolio under these crypto fund providers. It's becoming more popular, and as the years go on, we'll see even more money being poured into crypto because it's becoming an attractive asset. It's becoming less volatile, it's becoming more regulated, and once proper regulations come into place, I believe that it will become even more widely adopted, not only by individuals, but by institutions as well. NFT marketplace, OpenSea is valued at 13.3 billion after a Series C 300 million funding round. In July, it was only worth 1.5 billion, so it almost 10x'd in 6 months, which is quite a big feat. Paradigm and Kotu, which are very big VC funds, led a $300 million investment that cements NFT marketplace OpenSea as one of the most valuable private firms in crypto. It's worth $13.3 billion, and it is now the leading venue for trading NFTs. In the last 30 days alone, the marketplace for NFTs logged 1.6 million Ethereum transactions and a trading volume of 2.4 billion. This is incredibly massive. In 30 days, $2.4 billion worth of NFTs were traded, which means that there's a lot of demand for NFTs and it's here to stay. And OpenSea was in it early, and now they're king. They are now leading the NFT marketplace market. They're worth 13.3 billion. They raised $300 million more, and they plan to use the funding for product development, hiring, startup investments, and to significantly improve customer support and customer safety. It means that OpenSea, even despite being so big, they're not stopping. They're always working to improve. If there is any other company that can rival OpenSea, it's Dapper Labs. And they nabbed 7.6 billion valuation in September. in a round led by Quatu. So this VC firm is heavily embedded in NFTs, and it's behind two of the biggest NFT marketplace funds in the world. I believe that Dapper Labs has big potential because it can create NFTs in collaboration with NBA stars. This has a lot of potential for trading in the marketplace and for the holders of these NFTs to get rewards as well. So it'll be interesting to see if there will be a war between OpenSea and Dapper Labs. If there is, it's a good sign for the market because competition breeds innovation. On other good metaverse news, Nvidia makes its metaverse building software free for individual creators. This metaverse building platform called Omniverse combines graphics, AI, simulation tools, and scalable computing to help designers and creators craft 3D assets and scenes from their laptops or workstations. It's able to connect to independent 3D design worlds, which are often made with incompatible tools, into a shared virtual scene. So it seems like Omniverse will become like the OBS, the free version of NFT creation. People will be able to easily create NFTs on the Omniverse. Making it open source is a big deal because it means that a lot more individuals can now tap into their creative potential and their interest in NFTs and start building upon their portfolio. And Nvidia is only expanding Omniverse with new features such as one-click collaboration tool, new connectors, extensions, and asset libraries. So it's still a product in development. NFTs are pretty new. Omniverse is already pretty advanced, but innovation will still come, and the path to NFT creation has been made easy by Nvidia now, and I think it's going to improve with the years to come. Solana was hit by another network incident causing degraded performance. So it suffered a third incident in just a few months that clogged the network and caused transactions to fail. And there was a debate on whether it was a DDoS attack or not, or if it was just network issues. Most people are in agreement that it wasn't a DDoS attack because if it were, it would appear in the block explorer, which it didn't. And this latest incident comes less than a month after a previous attack, which saw reports that the networks were clogged with mass bottling due to another initial DEX offering on Solana-based decentralized platform Radium. So it seems like Solana has been having some scaling issues. The fact that there's been an increase in activity, or if there's a sudden surge in activity, it seems like the ecosystem can't handle it. And with this, on January 4th, the network went down for 4 hours. And the fact that Solana was dubbed as an Ethereum killer, and now we're seeing so many problems that already plagued Ethereum, we just have to think, is Solana really a good alternative for Ethereum? There are other layer 1 solution platforms which could offer a good alternative to Ethereum, and given Solana's unreliability, it could offer a good alternative to Solana as well. In an interview with Cointelegraph, Austin Federa, head of communications, stated that they're currently working to address the network's issues, specifically in relation to improving transaction metering. And Solana's runtime is a new design. It doesn't use the Ethereum virtual machine, and a ton of innovation was done to ensure that users have the cheapest fees possible. There is still some work to be done in the runtime. Given this, they have admitted that a lot of work needs to go into it in order for the product to become sort of perfect. I think it's more about growing pains, and if they can stamp out these problems, Solana can regain its position as a so-called Ethereum killer, or at least an Ethereum rival at the very least. But for that, they really need to step up their game, and they really need to improve the reliability of their network. These events of downtime cannot happen anymore. In such a competitive space, they cannot afford to lose customers and to lose their customers' faith at this time. With this, we come to the end of today's video. Thank you very much for watching. If you like the content, please leave a like, please hit the subscribe button, please share this video with your friends and family, and I'll see you tomorrow for another one. Cheers, and invest wisely.